So I'm sitting here with Dave Knutson. He is the head, would you say, of our private banking, jack of all trades, sales, recruiting.
Yeah, like many of us, Kyle, we wear many hats. So official title is SVP of Business Development.
So what's the favorite thing that you get to do day to day?
That's a great question. It's also a tough one to answer because there's a lot of different things that I enjoy doing on a daily basis. There's challenges involved in everything that we do. One thing that I kind of head up is looking for the talent, looking for top talent. Top talent, as many are more than aware, is super difficult to find. It's the ultimate commodity is what I've always termed it, because that product and that commodity has feelings, emotions, a voice. We could interview, you and I could interview the right person. We want to hire this right person. That right person goes home, talks to their spouse, and collectively decide it's not right for me. So then that person comes back to us and says, I'm sorry, Dave, I'm sorry, Kyle. I can't accept it this time. So that's a favorite thing, is just the thrill of the hunt, going out there. Like sales, you're involved with sales.
Yep. And that's the coolest part on, especially talking with you all the time, is all of the different sales tactics and scripting, role playing, all of that. Out of all of the sales tactics, what is your favorite?
The favorite is trying to boil it down and getting down to the why. Everybody has a why. Why do I do this on a personal standpoint? Why do I do it on a professional standpoint? What's that person's why? What's their drive? When it comes to you, the drive as a consumer is the ultimate dream, becoming a homeowner, right? Well, I have to find that drive in that individual coming, depending on what position a person is going to be going in or transitioning into, who we're hiring, what position we're hiring for. So I think that's the fun part of that thrill of the hunt, is not only finding somebody that's tangible, but also figuring out whether or not that person is exactly what we're looking for. Because at the end of the day, Kyle, we want to hire the right person that's right for us, but likewise, we want to be the right company for them as well.
So, and especially with finding your why, no matter what industry, whether it's banking, insurance, financial advising, you name it, building, it's a lot of the time it gets missed on going deeper and asking more and more questions on finding the why and peeling back the onion, per se, of each level of it to see, and that's where you get to develop that connection with the client and really take it to the next level. And a lot of people just stop at that first layer rather than digging in. And that's what's cool about the finding why part on it, is that.
You hit the nail on the head right there. Many situations, I don't care what anybody sells, I don't care what the widget is, the skills are all transferable, right? We're trying to find out a why. What kind of a value is it going to bring to this person? Is it going to match everything that they're looking for? Who else is involved with this whole decision-making process? But yes, a lot of people, when it comes to sales, no matter the widget, never ask enough questions. Keep on asking questions until it becomes uncomfortable. Because sooner or later, the person you're talking to might tell you to go pound sand, might tell you, well, that's enough, or totally deflect your questions and go on to a different topic. But always continue to ask the questions.
Well, and I think if you don't ask the questions too, it turns into commission breath, and people get turned off by it. And when you go for the why, along the way of finding out the why is finding the common connection to that person or what you're selling for it, to make the questions easier.
Yeah.
Because I think a lot of people, they'll just go into it and be, I just need to sell them this product, whether it's a house or a home loan. They just want to get them into the home loan rather than ask 4 more questions to get them into the right home loan. Or in some cases, tell them like, hey, you probably shouldn't buy right now,
right?
Because it doesn't make sense. And going for the finding the why.
In your situation, as far as the commission salesperson, right, the representative of a potential home buyer, if there is a loan officer, a realtor, anybody involved with that formula that's already trying to spend that money in advance before something is completed, they're doing it for the wrong purposes.
Yep.
And that's another thing that I enjoy, is not only from the staffing aspect as far as what I do and what we do here at Plains Commerce in Windsor, but the satisfaction of delivering, if that makes any sense, right? And being able to see that smile or that highlight in their eyes when you deliver what they're hoping that you can deliver.
Yep.
You know, at the end of the day, if you and I go across the street and we're going to have lunch at Hy-Vee, we're hoping that the food is going to taste good, right? All consumers are hoping that way.
Yep. Yeah, I think especially for like the cool experiences you kind of hit on, like one of my goals is wherever I go have the lunch at, is to have one past client you run into that you can say hey to. Whether you're out to dinner somewhere and you see a client across the way and you get a wave at them, or that, like, and that's where when you go and find the why and get to know them, because I know there's like it hasn't happened very often, but for me at least, you go somewhere, you see somebody and you turn the other way because you don't see them. It happens in the industry because people get the commission sales press where they don't want to see their customers out and about because they get the awkward exchanges or they don't remember or not. It's not a smooth process, and it's very transactional, which is cool on how what we do and getting to know and every single past client's basically family, and you're so ingrained with it. And that's what's cool about Plains too, is we get to run it like our own business, and every process is different from team to team. Like how I run it is different than another way a loan officer runs it.
Sure.
So we get the cool aspect on that, but it's all a family type oriented for it.
You know, I'm kind of snickering and laughing inside, to be honest with you, because there's been situations where exactly in that scenario, you recognize somebody, you go down the opposite aisle just to avoid them. And I've always told team members that on my team and other teams, I've always told my wife and kids, you want to be that person that if I call your cell phone and you see my name on it, I always want to be that person where you're going to answer it. If you see me coming down an aisle, you're going to want to approach, and I'm going to want to do the same.
Yep.
I never ever want to be that individual where I call and the other person on the other end of the phone is going, gosh, should I answer this or not? I really don't want to.
Well, and you just get rid of the awkward exchanges. And what's cool for us is I don't even know my office phone number. I have an office phone number. I have no idea what that number is because I only give out my cell phone. And we program every single customer's phone number into my phone, so that way when they call my cell phone and say you're calling me, Dave pops up. It's, hey, Dave, how's it going?
Yeah.
Rather than this is Kyle, or you have to call the office line to get a hold of us. It's always, we were literally just going on to our team role play with this the other day. You always want to start off on the right foot rather than digging yourself a hole. So when one of my loan partners was calling, he always asks, hey, is this so-and-so? Well, if you go into the phone call asking, hey, is this so-and-so, and as a consumer, you get that right off the bat, what's the first thing that you think of?
What's the first thing I think of? They don't even know me.
Yeah. If I call and say, hey, is this Dave? You instantly think it's a sales call.
Yep.
So your guards go up, you're defensed, you don't want to talk to that person. Where with Emmanuel, I was going through, it's like, hey, call and say, hey, Emmanuel, or hey, Dave, it's Emmanuel from Plains Commerce, or so-and-so from Plains Commerce. Instantly their guards down.
Yeah.
You're going to have a lot better conversation right off the bat. And you're not undigging your hole that you already dug yourself by the first 2 seconds of the phone call. So that's just one thing, like how we do things a little bit different and role playing with the teams on it all.
And let's face it, people like to be addressed by their name.
Yep.
It shows, it's like a sign of appreciation. It's a sign of respect.
Yep.
It's a sign that you know me, you know my story, whether it's me individually, me as a family, me whatever. Because again, the favorite radio station that all consumers like is WIFM. What's in it for me?
Yep.
Because at the end of the day, they're paying good money. They're asking for a service to be provided, and that's who we are. We're service providers. We're solution providers, and if we can call that person by name and have that story already in our mind, and relate that to real life stories that we may be through.
Yep.
That commonality, that synergy.
One, it makes it human. And with all the AI phone calls already.
Oh, yeah.
Like, I literally just had one this morning from a recruiter from some mortgage company out of California I've never even heard of. I answered the phone because the number didn't pull up. I said, hey, this is Kyle. And then it took a second. And then they said, is this Kyle? Like, all right, this is already fake. Like, this, you're done. Like, it lasted 3 seconds.
There's nothing worse than getting one of those spam calls talking about, hey, we have solutions to pay down your student loans, and I haven't had student loans in 30 years.
Yep. Apparently, I can get like a $500,000 business line of credit.
Just like that.
Yep. But I think what's cool on everything on our side is just how personal we make it here.
Yeah.
Is really what separates it out, and especially with the times that we're coming into. Of all of these servicers are going after our customers, and they are aggressive on the phone.
Yep.
They are super aggressive, telling people to do stuff. And I actually had a customer refinance with Rocket Mortgage, and I did their loan for $580,000 was their loan amount when we did it. They bought 2.5 years ago. When I was working up numbers, I called them and said, hey, can we work up numbers, see what we can do? It's time to save you some cash on the refinance. Their loan balance, when I got the updated soft credit pull done, was $610,000.
Oh boy.
So they had over $30,000 of fees, discount points, because Rocket had them buy their rate down to 5.5%. Well, they didn't go over the break-even point on it. It's 5.5 years for them to recoup that money to get down to that 5.5%. So if they refinance, move, do anything in the next 5.5 years, they are out that money. Like,
and that's the problem with transactional relationships, right?
They're not looking out for the best thing in the borrower. They just want the deal.
And the borrower probably didn't know everything or about the whole package either.
Correct.
And you do such a good job at that too. But that's the relationship piece that we're always we're striving for.
Yep.
If we can get 1% better each and every time, each and every transaction, and have that true relationship instead of a transactional relationship, boy, I mean, sometimes though the consumers, I mean, I admit it myself, if I see a good deal and it sounds good, but that old cliche, if it sounds too good to be true, guess what?
It probably is.
Probably is.
Literally just had another one yesterday too, not even completely different scenario. They went out to, it was like Lending Tree or some website on there that breaks down all these rates, and they had 5.375 on there, and it was going to cost them 1.9 points to buy down to this. So it was like $14,000 to buy down to this low rate. Well, when you figure the break, which we can do the same thing, is it smart to do that? Probably not when you look at the break-even points of it. And in that case, it was right at 6 years was the break-even point to buy down to that 5.375.
Yeah.
So basically what you're saying is in the next 6 years, you're never going to have a chance to refinance at 5.375 or lower, which that's a long time. Nobody could ever promise that you'll never be below.
We don't have a crystal ball.
Yeah, but it's just like, I'll take my chances. For that part. That's just where the odds are, percentages. You'll be able to get down to that at some point in the next 6 years, whether it's a quick dip or something, and not have to pay the $14,000 in discount points.
Right. One thing that scares me too with all of our servicers, and we hear about this all the time, we don't know exactly the talent that's on the other end of that phone, the other end of that computer. And we know the talent in our room, and it kind of concerns me and scares me for some of our consumers that end up going that direction, like that example you used with Rocket.
Yep.
And the reason why is because a lot of times, since it's so transactional, these people are simply checking the boxes and going down the list of names and call, right? And they don't understand that Sophia, the daughter, has been going through healthcare situations for X amount of time. They don't understand that Bob lost his job 6 months ago and just finally got another one. All they're looking at is the bottom line, because they're not in that relationship like I know how well of a job you do and our other officers. I mean, it's super scary. That's the environment we're in. Is it going to change? Nobody knows.
I think it's only going to get worse for it
I do
as
too.
they are able to buy stuff, and all these internet leads that happen for it. When they get their hard credit pull done, they get sold to all these call centers. Granted, that's finally going to be changing hopefully in March here.
Yep.
But they all get, and it's a contact sport for them. If they can call 1,000 people and get 20 to work out by just throwing a pre-qual letter out there, that's where seeing people out and about for it. Like if I give a pre-qual letter out and it doesn't perform, I'm probably going to run into them at Hy-Vee.
Yeah.
If Rocket or some call center gives a pre-qual letter out, they don't see them out and about. They just don't answer the phone call after that. And the same thing with the realtors on that side for it. Like my pre-qual letters matter when I see a realtor out and about, or when my clients are putting an offer on another house, they see my letter on it. They know it's going to perform for it. So that's where we're tied in. That's why local's always better on that part, because they're so vested in it.
Yes.
So,
and especially when it's local. I mean, it's a community. Sioux Falls is a big, small city.
Yep.
It seems like there's a network. And especially with today's technology, there's no more 6 degrees of separation. There's not even a 5 or a 4, I think, in my own humble opinion. I think it's 3 or less. Mm-hmm. So having that one-on-one and making sure that we deliver and making sure that we keep our promises and just do the very best and make that experience with the consumer as best as possible. Because inevitably, we do run into people from time to time, more so than not.
Yep. Yeah, and especially for the locality part of it of underwriting. Like what's cool for us is we have, 40 plus underwriters now probably.
41.
Throughout the company.
Yeah.
Where a lot of places they have one. So if you don't get the right answer out of that underwriter might not even be right with their answer that they give, or if it's different, we can go talk to the next level or the next level. Like this morning I was questioning one thing that an underwriter said and was talking to our head of underwriting on the entire deal for it, and I had the issue fixed in 5 minutes.
Yeah.
And done. Where for somebody else, you're just talking to that one underwriter, and they have the stamp of yes or no, and there's no power at B to try and argue it, which is something cool that we have that a lot of places don't.
Yeah, our infrastructure is super unique in that aspect. We're one team, which is one of our core values, one team. And being able to communicate amongst each other is pretty unique. A lot of other places, hence the aforementioned company that's so big, this person that's initially fielding or making that call might be at a different location or a different state for them.
Yep.
We just walk down the hallway, we go downstairs, we go upstairs, we do whatever it takes, and we take those hard files, right? The hard file like you. That's one thing that we're super, super good at, is taking the hard files and figuring out a solution to make it work.
Yep. And to explain it the right way, because not every time we're not always going to make it work, because there are circumstances where we might not.
Have to protect we have to protect ourselves.
Yep.
Right?
I always like to joke around that if we can't do it, no one legally can, is kind of one that I always like to say.
Yeah.
Like, we have so much experience where we can find out a way to do it, and if we can't do it, somebody's breaking a rule for it.
Yeah.
And if we can't do it, explaining it to the person the right way. Like another scenario yesterday, they were with a smaller place in town. They couldn't do it. Just said, no, we can't do it. And realtor sent them our way. I broke it down to them. It's like, yeah, we can't do it right now, but once you're at your place for 6 months,
here's why.
Yeah,
right.
Here's our game plan on how we're going to get you into a place, because it might not be a no, or it might not be a yes right now, but in 3 months there's an opportunity for a yes, and it's to put out that game plan to follow up where that other person didn't give them anything.
That kind of reminds me of a playbook, right? And we host playbook events all the time. But can you imagine a football team? We're in the playoffs, whether it's college or NFL, and the quarterback and the whole offense goes out there, and the coach says, just run a play. Well, what are they going to run? There's no playbook.
No.
So in your example there, by offering that playbook, here's the strategy. This is the first play we're going to run. 3 months from now, we're going to be at this play.
Yep.
At least the consumer understands, and they have a goal, and they have a vision. There's an end line. There's a finish line that you can run through, right?
Yep. And it's crazy how often that happens where they just get a no and they're on to the next person. Where I would like to think the majority of us here would give them the game plan for it, or at least I give every single person the game plan. Because there was another one, I always like to throw out scenarios because we kind of see so much throughout the day. No one's ever the same. Was they were actually on a loan with a sibling and they live there. So it's like, okay, our first try is going to try and assume the loan and get it out of your name and have your sister get it put into your name. And then if that happens, we're good. If that doesn't happen, then we need to do this. And then if that doesn't happen, we need to do this. So there were 4 different plays that I gave this gal yesterday on ways we can get her into a home. We just need to do this, this, or this. And give them the steps to what they need to do.
Yeah.
And that's so often where there's so many other people that are just like, no, we just can't do it. On to the next.
Yep.
But that also goes into kind of where we started with finding the why. Like, what's the reasons? And just getting to know the person on a human level for it.
Yeah. Yeah, there's always that why. And a lot of times people fall short of finding out that why because they're not interested in necessarily the consumer's why. They're interested in their commission breadth personal why.
Yep.
So that's where we differentiate ourselves quite a bit. A lot, actually, in my, again, humble opinion. And we really break it down and have it make sense. We take that complicated jargon and dumb it down so that even I can understand it as well as the consumer, because at the end of the day, we all have to be on the same page fighting for the same goal.
Yep, absolutely. And everybody wins by doing that too.
Yep.
The consumer wins, realtor wins, everybody wins, like just by taking the time and making everybody in the, or putting everybody in the loop and putting that game plan together.
Yeah, I agree. 2026, it's a new year. We're in the beginning, right?
So,
rates have fallen. There's good things. Isn't the inventory increasing as well?
yeah, it's a really nice time for buyers, and it all depends on what rates do. They're kind of projecting on a little bit similar to how it was in 2019, where rates started off higher, gradually decreased throughout the year. So especially right now, there's more inventory on the market right now where buyers can get seller credits. They can get things negotiated in to help them get in with a little bit lower payments for it because they can get those for seller credits and buy downs. Whereas soon as, in my opinion, summer hits, hopefully rates come down during that time. But we're already, the national average is 3/4 of a point lower this year right now than where we were at last year at this time. So we're already quite a bit lower. And if people wait for another 1/2 point, that's going to bring 1 million plus more buyers into the market. They're going to lose those seller credits. They're going to lose negotiating power. So that's going to hurt the people looking at buying the longer that they wait. Conversely, for all those people that bought the last 3 years and were getting to the point, there's going to be opportunities for them to save money because rates are going to come down to refinance. And the big kind of rule of thumb on that is you want to get 1% lower interest rate if you're paying closing cost, 1/2 point if you're not paying closing costs. And that's something like, for me, I always track that with my borrowers for it. So that way we reach out to them saying, hey, it's time to refinance. Like, I had one person reach out to me this morning that they were in the upper 6s wondering, hey, is it time for us to pull the trigger yet? It's like, not quite. We're getting there. We need about another 1/4 lower, but once we hit it, I'll be giving you a shout. So that way we're tracking it for every single person I've ever done a loan for. So I actually have a spreadsheet of 2,100 past clients sorted by interest rate, and as soon as it makes sense for them to refinance, save some money on that part, we call them and start having that conversation.
See, that's kudos to you as well, Kyle, because if you weren't looking out for the best interests of the consumer, you could have easily said, yeah, let's do a refi right now.
Yep.
You know, let me get my commission and I'll stick them in this loan and they'll get out of it in 2 years and whatever that looks like. But
yep. And
again, doing it right, the right way.
At that point, another scenario, had a person 2 years ago. They refinanced with somebody 3 months before they sold, and we're going to buy another house. And they paid closing costs, did all this. Like, did the lender ask you, like, did you mention to him that you're going to be selling in a couple months? And they're like, yeah, he still told us that we should refinance. He just wanted to get paid from that refinance. It cost the borrowers about $4,000 is how much they lost on doing that refinance because they were going to be selling. So it's just finding out. It kind of goes back to that why
Yep.
and what your real estate goals are in the future on if it makes sense to it or not.
Right.
'Cause
I'm kind of curious. When I'm here at work, I don't get out of my kennel very often. They usually look at me through the glass. I can't get fed because it's closed. But I'm curious as far as, let's face it, it's been tough over the last 3 years. I mean, it really has. It's been a challenge for all of us. Still fighting the battle in this crazy mortgage industry, which you can't get an education at a local college or a university across the country. What does that look like from a footprint of the number of loan officers within our metro area compared to like last year, the year before?
For our area, it's stayed fairly consistent. There hasn't been too many that have gotten out, that I know of anyway.
Because we really didn't get hit as hard as other areas.
Yes, we've always been in our little bubble. Has it been down for some? Yes. Has it been up for some? Yes. I've been fortunate enough where I was up from 24 to 25. But there's definitely some people that are lower that haven't hit that increase yet. And part of it's because they don't get held to the accountability.
Yes.
There's a lot of people that don't like to be held accountable on A, production, or B, calling past customers or calling people for it in general. They just sit in their office and wait for it to come. And those are the ones where they're out or they've saw the decreases in it. But I think nationwide, I think it was like a $20,000 mortgage banker drop from last year to this year. So it's been a steady decrease from the peaks of 21 through today, where it's kind of survival of the fittest.
From utopia,
Yes.
mortgage world utopia, into reality.
Which is scary because it's going to start going the other way, because I think we're probably going to be at the trough of mortgage bankers, and then you're going to start seeing the mortgage banker numbers go up, and then those newer ones don't have the experience. They're just coming in to make a quick buck.
Yes.
And they don't know the picture of it, of doing what's right for the borrower. They're just there to get paid.
Right.
So it's just and we're going to start seeing that come back up again. Once, my guess is probably the summer we're going to start seeing an increase. I know some of the great big mortgage companies were hiring like 1,500 people to get ready, and it might even be more than that for some of those bigger ones, to get ready for the refis and when they start coming through. And those people don't know how to set up a refi. They're just calling to try and get you in the queue to get a refinance done.
The low-hanging fruit.
Yeah, and that's where you got to go with the trusted person, because they're going to watch out for you for life.
Yeah.
So.
Well, I'm super excited about 26. I'm super excited because the rates have come down, like you mentioned. And again, nobody has a crystal ball, but they're talking one maybe towards the end of the year. Maybe there's two. Who knows?
Yeah.
But as long as we always find out that why and dig deeper and ask extra questions, I'm confident that we'll always end up on top. But let's face it, it's a new year. It's kind of like cleaning out a closet that you wanted to clean out for 6 months. You finally do it and you feel good about it. Or getting rid of all those socks with the holes in it.
Yep.
It's just a fresh start, and it is refreshing.
So, yeah, off to a good year.
Yep.
So.